Mr. Morelli, another introduction I see is coming from the floor.
A distinguished former member of this House and a great friend. I see the Speaker walking in. We are delighted. We often miss Ruben Diaz Jr., but we are always delighted when he comes back to the chambers. The President of the Bronx is here. Please acknowledge him, sir.
I'm often said that former members need no introduction, but on behalf of the Speaker and all the members, Ruben, we welcome you here to the New York State Assembly. We extend to you the privileges of the floor as a former member, and you're looking just as good as when you left. That's a good thing. Welcome, my brother. Clerk will read.
Assembly 1298, Calendar 471, Ms. Weinstein, an act to amend the civil practice law and rules.
Explanation is requested, Ms. Weinstein.
Yes, thank you. This, it's some of the major changes we made to help with individuals facing foreclosure. Several years ago, we enacted the CPLR Section 3408, which requires settlement conferences before a residential action moves forward, a residential foreclosure action moves forward. And one of the requirements is that both sides negotiate in good faith to reach a mutually agreeable resolution of the situation. However, we have heard that, in particular, a number of lenders are not acting in good faith, really in violation of the express statutory language. That's the core purpose of the settlement conferences. They come to conferences without proper paperwork. They have provided at times misleading information. They have incorrectly argued that the law only permits certain types of workout arrangements, and sometimes have begun foreclosure actions after promising not to do so in a loan modification offer. So those actions really frustrate the purpose of our settlement conference law and end up prolonging the foreclosure process. So what this measure does is provides clarification and guidance on the rights and remedies of the party to ensure compliance with the express provisions of the settlement conferences, including providing guidelines to measure good faith negotiations by the totality of the circumstances. It changes the time frame to file certain notices. It preserves the ability of an unrepresented defendant who's participated in a settlement conference to answer the complaint within 30 days from the release of the case. It clarifies that motion shall be held in abeyance during the settlement conferences. It also clarifies that all settlement options short of judgments of foreclosure and sale, including loan modifications, short sales, deeds in lieu of foreclosure, are all encompassed within the purposes. It does clarify that the plaintiff's representative that appears shall be fully authorized to dispose of the case, producing all the required documentation, and importantly clarifies the court's authority to enforce mandatory settlement conference provisions with a list of penalties, sanctions, including ones tailored to the harm occasioned by the violations of those provisions. There's probably more detail I could go into, but I prefer to respond to some of your questions.
Mr. McEvan.
Right, and that actually leads me to the purpose of the bill. I mean, since 2009, we've already required these mandatory settlement conferences. So the way I just really read the bill is, I mean, courts already have sanction powers. If you have a bank that's coming to a foreclosure conference and they're not acting in good faith, don't the courts already have the ability to remedy it through the court sanctioning power already?
The referees, the courts have determined that we could argue somewhat whether we think they have the power, but the courts have determined that the referees themselves don't currently have the power to sanction, even though I think when we enacted the initial law, that was our intention, so that they can't really, they have very little weight behind their inability to enforce that the plaintiffs bring all of these documents, have someone there with authority to settle, to make loan modifications.
Just go on to a couple of questions which I think are rather new in this bill. If we're looking at page 3, lines, I guess, 16 through 21 or 22, you promote a new standard here that if a defendant appears at a settlement conference, but they have not gone, I guess, answered the action, or there may be some sort of request for default, that if they appear at the conference, then they shall be presumed to have a reasonable excuse for the default. And that's a little bit different than what we require in the statute right now. Ordinarily, if a person defaults an action and they want to vacate it, they generally have to have a meritorious defense as well as a reasonable excuse. And this instance, just because they show up, waives that reasonable excuse. I'm just wondering the purpose behind that section of the bill, if only for the reason that, again, they should at least have some excuse, whether by, they're unaware of the proceeding or, some sort of extraordinary circumstances preventing from do so. And now the fact that it just shows up waives that excuse. And I'm just wondering the purpose behind, again, this section of the bill.
I'm assuming that Ms. Weinstein has decided that she will yield to you. We just missed that, right?
Yeah. Sorry. Ask if the sponsor will yield first, and then answer the question, long-winded question I just asked.
It's very similar to the discussion we had on the other bill, where they're appearing, they haven't filed their answer yet, and they have the opportunity there.
Okay. Going on also to lines 27 through 30, one new requirement you put in here is that a motion shall be held in abeyance while the settlement conferences are being held, which I certainly understand, because you want to go and bring the action to a conclusion, hopefully to an amicable conclusion. But just going back to the prior bill, let's say the motion is on behalf of a defendant saying there's a lack of personal jurisdiction or a lack of standing. I would think that those are issues you'd want to get resolved very quickly rather than going through a settlement and still have this type of motion outstanding. So again, the question I then would have is why would those type of motions we would hold up while the action is still pending while they're going through the settlement conferences?
Yeah, I do think that I understand where you're coming from, but I do think that the motions are stopped at that point. Okay. But I do think that some of the standing issue, the underlying issues regarding standing, could be discussed at the settlement conference.
Okay. And just finally, just looking at it, here you actually also indicate very specifically remedies for violations on page 3, starting at paragraph 31. But just interestingly enough, one of the remedies you put out at lines 42 is tolling and or barring the collection of interest, costs, and fees accrued during or prior to the settlement conference process. And I'm just wondering whether that could possibly be in violation of the mortgage agreement, because generally the banks will put in there that if they're successful at the end of the mortgage process, they'll be entitled to interest and fees. And I'm just wondering whether there could be a constitutional issue with violating the contract that the banks would have with the mortgagor during the process.
We believe that this is in keeping with some Second Department case law regarding the tolling of fees and interest. So we don't think that it would be a conflict with the underlying mortgage agreement.
Okay, thank you very much.
Mr. Goodell?
Thank you, Mr. Speaker. Would the sponsor yield?
Will you yield, Ms. Weinstein?
Yes, always.
Sponsor yield.
Always a pleasure, Mr.
Always
Goodell.
a pleasure. How about that, Mr. Goodell?
Thank you very much.
At least up until now, yes.
On the bill? No, just that. As you know, the Department of Financial Services issued a report on the New York foreclosure process in May 2015. And one of the things they pointed out is that New York State's foreclosure process is one of the slowest in the entire nation. And at that time was averaging 934 days. And of course, during that extensive time period, taxes are not being paid, the property is deteriorating, zombie properties are occurring, homeowners are left in limbo, interests and penalties are accruing. And so almost every observer expressed great frustration over the delay. And in particular, they noted that the delay associated with the mandatory settlement conference averaged 271 days, or 9 months. So my question is, these changes that you're suggesting, won't they add substantially to the delay that is already plaguing the system and result in more zombie properties?
Oh, and I thought you were going to say, won't these changes shorten the period, the amount of delays? Because, in fact, that's the effect they will have. As you look through the DFS report, many of the delays that are outlined in that report are delays caused by the actions that are within the plaintiff, within the lender, the bank's control. The delays in conferences, in the pre-foreclosure conferences, are a result of many of those issues that I mentioned, showing up, the lender showing up without someone with authority to modify the loan, showing up without proper paperwork in adjournment, showing up without as I said, someone with authority to make without authority to make an adjustment, the loan modification. The referee says, adjourn, come back with someone. And it goes on and on by requiring good faith to require the showing up with someone with authority, showing up with documentation, making a good faith effort to try and modify the loan. You will have a dramatically shortened pre-settlement conference procedure. You'll have settlements coming out of that procedure. You'll have workouts, loan modifications, workouts coming out of their procedure, and it will shorten, not lengthen, the amount of time that it takes for a foreclosure action in the courts.
Thank you for your comments on the bill.
On the bill, Mr. Goodell.
Right now, New York's mortgage foreclosure process is one of the slowest in the nation. And as noted in the report by the Department of Financial Services, this tremendous delay is very detrimental to homeowners because whatever equity they have in the house at the beginning of that foreclosure process is chewed up with interest, late payment charges, the cost of maintaining the property, accrued taxes and insurance premiums. And as a result, by the time the foreclosure sale occurs, which is almost 3 years in New York State, over 930 days in New York State, by that time, the homeowners have lost virtually every chance they have of redeeming any equity they might have in their house. And one of the biggest components of that delay, averaging over 271 days, is the mandatory settlement conference. And this bill adds 2 specific requirements to be considered at that settlement conference. 1, a short sale. What's a short sale? A short sale occurs when the owner of the house or the bank working cooperatively put the house up on the market and try to sell it for whatever they can get, even if it's less than the amount of the mortgage. It's called a short sale because the sales price is short of paying the full mortgage. What's involved in a short sale? You have to list it. You have to find a buyer. The buyer has to get financing. They have to close the deal. A short sale will add months and months and months to the sale, to the foreclosure process. The second mandatory requirement is that you consider deed in lieu of foreclosure. So what's that mean? That means the homeowner says, here, let me give the deed back to you, bank, and we'll call it a day, and everybody goes away happy. What's the problem with a deed in lieu of foreclosure? Well, a bank won't take a deed back in lieu of foreclosure if there's any other liens on the house. Because when they foreclose on the mortgage foreclosure eliminates the secondary liens. But if they take a deed in lieu of foreclosure, the secondary liens now take priority over what used to be a mortgage lien. Well, I've got a personal case in my law firm where I've been working on this, where the landowner said to the bank, I'll give you a deed in lieu of foreclosure. It's been 10 months. Why? Because we had to get the IRS to agree to waive everything. We had to get every secondary lien holder to agree to release their lien. It's not a quick, easy process. So if we are serious about helping homeowners, then we should follow the lead of almost every other state in the nation, which is to make the mortgage foreclosure process faster and less expensive so the homeowner can recover some of their equity, so that we can get the properties back on the tax roll, so we can get new families in those houses maintaining them, so that we can reduce the cost of mortgage foreclosure, so that we can reduce the interest rates and the premiums that we charge them, so that we can make more mortgages available for more people who need mortgages. So think about that. We have two paths. One, make it easier for families to get a first-time mortgage. Reduce the cost of the mortgage. Maximize their opportunity if things go right to maintain some level of equity and recover. That's one path. That's not the path we're taking. The second path, drag out the mortgage foreclosure process for years. Add cost to the mortgage foreclosure process. And what happens? The banks will raise the underwriting standards. The working poor will have more difficulty getting a mortgage. If they've fallen behind, their chances of ever recovering their equity is eliminated. Let's be compassionate about first-time homeowners. Let's help first-time homeowners qualify, not write them out of the market. Let's make a process easier for people to keep these houses and maintain them, and if they can't, to get a new family in to keep them on the tax roll and maintain. That should be our focus. While I appreciate the desire to help the homeowner who can't and isn't making payments, this process drags a really long process out a lot longer, to the detriment of all future borrowers and to the detriment of the current homeowners. For that reason, I'd recommend a vote against this. Thank you.
Thank you, Mr. Goodell. Mr. Kearns.
On the bill.
On the bill, Mr. Kearns.
When I came to the New York State Assembly back in 2012, before I was an assembly person, I was a Buffalo City Council member. And to my surprise, when I started representing first-ring suburbs, some of the same things that were happening in the urban areas were now happening in our first-ring suburbs. We did what most people do. You try to reach out to the banks and you say, what's going on? What's the problem with this property? And we filed some simple legislation that passed this honorable body. It's just a good neighbor bill. If your neighbor next door to you was having problems and their grass wasn't cut, or you haven't seen them in a while, you may knock on their door and you would say, neighbor, what's going on? How can I help you? Well, for 4 years, I've been listening to the banks. I've been listening about compassion. But unfortunately, in the district I represent, we have thousands and thousands of foreclosed properties where the banks start the process and they don't complete it. And when I hear from the banks, when they return your phone call, possibly, maybe, or maybe never, they will say to you, the foreclosure process is too long. Well, let me give you the story of two properties. One is 390 Germania in my district, which for 9 years, HSBC had this property, one of the largest banks, and did nothing. Didn't cut the grass, didn't work with the neighbors, we couldn't get a contact, and unfortunately, they discharged the mortgage. You forgot to say that. Many of the banks walk away from the problem. They can discharge the mortgage at any time. In addition to assigning the mortgage, they can discharge the mortgage. The other property in Buffalo, and I know my colleagues will agree with me, is HSBC, a very prominent building in our community. The former building also went through a foreclosure process. 390 Germania, in a neighborhood where maybe the properties are worth between $50,000 and $60,000, 9 years to not even complete the foreclosure process. HSBC Tower, a building worth maybe $50 million, very complex foreclosure. They got it done in a year and a half. Do you know why? They got it done because there was some value to that. There was some money to it. And what I'm saying here today is we have to get beyond the foreclosure process. We know in Erie County for a fact that there's 2,000 zombie properties, and that's underestimated. That same report that you talked about with the Department of Financial Services, they also talked about a best practice agreement in 2015 where the banks would voluntarily report. Well, after foiling this for many, many months, I finally received the list from the Department of Financial Services, and on that list, there were 380 properties. I have a list in my district of over 2,000. So to me, any legislation that helps move this process along, the banks have some accountability, they have some responsibility, and we can't even get the banks to give us the list of what banks they're responsible for, even if they don't have a duty, so they say. So the banks don't act in good faith, they don't act fairly, and if someone could give me a better reason of why you can do this better, I'll bring it to my district. I'll take you to Orange County with Assemblyman Skoupis. I'll take you to Niagara County with Assemblyman Soretto. I will take you throughout the state because I get calls from all over from the state of people. We went to the lowest of the low to the point where we had to shame them. We had to put a sign out and say, shame on you for not being a good neighbor. Is that what it takes? I always thought in this honorable body we can get things done through legislation. But when the banks lobby say, this bill is not a good bill, who is it a good bill for? We have thousands and thousands of zombies. We have thousands and thousands of incomplete foreclosures. When are we going to do something about it? The Assembly sponsor, I think, is being progressive. She's moving forward with a good bill. But please, when you talk about compassion, I'll tell you the number of stories of the people that were forced out of their house. Even legally by law, they're allowed to stay. Service providers shooed them out of their house. Families with kids, you look through the windows, they still have the Christmas tree lights. They just got up in the middle of the night, in embarrassment, they left the neighborhood. So to me, we have to do better. We haven't done well over the past 4 years. We need to hold the banks accountable and responsible. I'm going to give a hint. Best practice agreements don't do it. We need laws. That's what we were sent here, is to perform laws, to create laws. I'm hopeful when this package of bills comes forward that we could start anew. But I talk to my new colleagues, and when they tell us that the bank lobbies come to their offices and say that these bills aren't good bills, but they still have these foreclosure properties. So for me, I'm in support of this bill. I want to thank you for giving me this time. I do appreciate it. But to me, there's a bridge I'll sell you. I know it's Brooklyn Day, and I'll sell you that bridge if you tell me if the foreclosure process is too long. Thank you. What? Oh, Bronx Day. Sorry. I guess I'm going to sell another bridge.
You almost got there, Mr. Kearns.
I'm sorry.
Mr. Lento.
I'm sorry.
Thank you, Mr. Speaker. Again, I have to rise today to understand how anybody could oppose a measure. And it's the only time I rise because I'm very confused about this situation. Here we have banks that engaged in predatory lending that got us into a financial crisis, the proportion of which we have never seen since the Depression. And yet we're talking about legislation being inadequate because it fails to protect the bank's interests. Who protected the homeowner's interest when the banks were engaging in predatory lending? Here we have a situation where the sponsor ought to be congratulated and held up to great esteem because of her bill that at least tries to put a dent into having the foreclosure crisis ameliorated. This bill is a very simple bill. If you're going to have conferences in order to settle foreclosure cases, you got to have the bank's cooperation. Otherwise, you're not going to have it. Now, you and I know that this is a big hardship on individuals whose properties have been foreclosed. What hardship has the bank suffered, especially the ones who engaged in predatory lending? They haven't spent one day in jail or spent a nickel. The only money that has passed hands was from the federal government to the banks in order to bail them out. And I think it's high time we took the banks to task for what they've done to Brooklyn, who alone has 12,000 foreclosure cases that have yet to be settled since 2008. And I believe that this bill is a small step, but a necessary step, not to bring the banks to their knees where they belong, but to try and resolve this problem once and for all. And I hope that everybody votes for it. Thank you, Mr. Speaker.
Ms. Robinson on the bill.
Thank you very much, Mr. Speaker. I, too, stand to support this piece of legislation because, as my colleague has expressed, how many pieces of property that we have within our community that's going abandoned, or people within the community are going to settlement conferences without the benefit of counsel, and as a result of that, they're being taken advantage of. The advocates are coming to us each and every day telling us about the conditions within the courts where people are not getting their due process. And so as we stand today with the Assembly member who has introduced this legislation and all those that support this, because there are crisis times within our community where people are being put out. With the excessive building that's taking place in our community, pieces of property are being stolen from many of the homeowners within the communities that we represent. At some point in time, there has to be a word that says enough is enough. And so as we look at this piece of legislation that will be able to provide for the right things to go on in the courts when people come in, we're looking to ensure that people have the right counsel so that when they come to court, that they will be able to go home and fix whatever needs to be fixed. People have told us about how if the I wasn't dotted or the T wasn't crossed, that the settlement conference was just postponed. And so therefore that continues this process on and on and on. And it keeps people in a state of limbo. We're asking at this time that our colleagues support this legislation because it's the right thing to do.
Read the last section.
This act shall take effect immediately.
Clerk will record the vote. Mr. Perry to explain his vote.
Thank you, Mr. Speaker. I want to commend the sponsor of this legislation and all of my colleagues who worked to bring this to a vote. Struggling homeowners across New York and the United States need some help. After what happened to our banking system, where some real crooks hijacked the system, made off with a lot of money, and left everybody in turmoil, a lot of us at risk. I'm sure I have colleagues with relatives and friends who experience the trauma of having to lose a home. And so people are still struggling and fighting hard for their homes. They need some help. They don't need little helps or little helpers. They need big help. And this bill, if we enact it into law, will provide them with some big help. It'll stop the big bad bankers from rolling the folks around and getting away with the tremendous crime that they committed, and so far we have not been able to hold them accountable. So I urge my colleagues to think about those folks who still face that trauma of losing their home and pass this bill into law. We'll be doing our jobs, Mr. Speaker, when we vote yes on this bill. We'll be earning re-election. We'll be earning the right to be here because we will be speaking on behalf of the people. Thank you, Mr. Speaker. I withdraw my request and I vote in the affirmative.
Mr. Perry in the affirmative. Ms. Weinstein to explain her vote.
Yes, Mr. Speaker. To explain my vote, we heard some discussion about the length that foreclosure cases take in New York State and sort of the lenders complaining about it. And I just wanted to cite from some other numbers from a report that was cited earlier by one of our colleagues. It takes from the filing of the service of process for the lender to then ask for the request, the RJI, the request for judicial intervention to get the court process starting, upstate 162 days and downstate 168 days. So other than the 20 days that someone has to file their answer, those 140 plus days that the process is delayed is totally within the lender's hand. And as you go through the process, there's further times that the process is delayed, but again, numerous times because of the lender's failure to move the process along. This legislation will both provide some fairness to homeowners facing foreclosure, as well as actually speed up the process to a resolution, and I urge its adoption.
Ms. Weinstein in the affirmative. Mr. Soretto to explain his vote.
Thank you, Mr. Speaker. I too rise in support of this bill right in front of us in my district, and as it's been noted that we've already have recorded 500 disclosures or houses that are in foreclosure, and I'm sure there's many more. And these banks, I mean, they're putting average people out of their homes, and it affects everybody. And it's not even in the inner cities; it's all over. It's almost like a cancer in society. It's in the suburbs. I've been to nice neighborhoods where they have foreclosures, and and with these foreclosures, the banks are not taking care of their properties. The grass isn't cut. In fact, in some of the neighborhoods that I've visited, the residents around them are trying to cut the grass because it's decaying their property. We have a crisis here in New York State, and it's not even in my district. It's all over the state. We have to do something to help the residents in this state, or else everybody's going to be out of the business because they won't have any homes. And this is a very serious matter. The average person that I know in my district, their home is their castle. It's the biggest asset they have in their life, and we have to protect them. So therefore, I support this legislation, and I thank you for allowing me to say something.
Mr. Soretto in the affirmative. Ms. Harris.
You know, I was in the lounge when this Ms. Weinstein was talking about this bill, and as we were in there eating together, I decided to talk about yet again, how this bill makes a big difference when I suffered from Hurricane Sandy along with my community. And one of the things that affected us directly after Hurricane Sandy was foreclosures. Insurance companies did not do what they were supposed to do after the large storm. I've been through 4 storms in my community. Hurricane Sandy, and again, I don't care what you name it, although I do believe Sandy was a man because of the way he crept in and then crept back out. It was one of the worst things to have to go through when you see that your neighbors cannot afford to stay in their homes because of the stuff that the insurance company tells them, that they're not going to help you because your house is to the left. They're not going to help you because your house tilts a little to the right. They're not going to help you with your roof because it's flat. They're not going to help you if your roof tilts. So those people had to go through foreclosure. And most of the people that went through foreclosure in my neighborhood are seniors. And that is deplorable. So I stand with my colleagues that vote yes on this. I stand with Ms. Weinstein. This is an excellent bill, and I thank her so much for this. And I definitely vote in the affirmative. Thank you.
Ms. Harris in the affirmative.